Welcome to Easy Cash Flow. I'm Kim Dallefeld, and with me today is Cynthia Prevey. Let me tell you a little bit about me. I've been doing NAV a year or two, and I still love it after 25 years, right? It's just fun. I learn all the time, and I can teach other people the little tidbits I learned, and I think that's what's fun about it. And every business is different, so how one person's going to use it, we can bring those pieces of information and share them with everybody.
And hello, everybody. I'm Cynthia Prevey, and I'm not quite as geeky or so in love with NAV and BC as Kim, but I'm really, really close. I've been working with it since 2005, and I love my job as a consultant and trainer because, believe it or not, what I love about it is I get to work with frustrated users. And I actually like that because I get the opportunity to help somebody who's sitting there saying, oh, there's got to be a better way. And we all know there's so many different ways to do things in NAV and Business Central. So I get the opportunity to help them find the righter way and get a big smile on their face when they're done. So I guess I am maybe as
a little
about it as Kim. All right, never mind.
But it is fun, and we really do enjoy working with users and helping them out. I love this saying, if you don't like the road you're walking, we'll start paving a new one. And I thought that was really cool because we're going to talk about the steps or the paving into your cash flow. So let's start walking. Objectives. We're going to talk a little bit about the difference between a cash flow statement and a cash flow forecast, right? Statement of cash flows or cash flow statement and cash flow forecast. We'll talk about all the individual things that it takes to set up your cash flow forecast, and then we're just going to walk through the steps of building one here today, and you should be able to take those steps and get started building your own, which I think that's the point of this exercise.
So Kim, I want to tell you, before we decided to do this session, I was actually intimidated by this whole thing and confused. So I think as much as I appreciated going through this exercise, I know that everyone else, thanks to you and how you've put this together, is going to not be intimidated when we're done with this session.
I really hope so. Yeah, I think it is one of those areas you hit the nail on the head that people are intimidated by, and I was too. And then I found out it's not that hard, right? And so I'm really hoping that by sharing this, we open up a whole new area of BC or NAV for you to use. So
that's the plan.
That's the plan. So let's talk about the differences. So statement of cash flow or cash flow statement, as I've heard it called, and it's really, it's typically part of your financial reports that you do monthly and what auditors look at. And it's really talking about what's happened already, right? Where did our money come from? What did we use it for? And we typically build it just out of the general ledger, right? Because it's reporting on what has happened. The reverse of that, or I guess the counterpart of that, is our cash flow forecast, which is what we're going to talk about here today. And it's all about what could happen. We don't know it's going to happen yet. We don't know when money is going to flow in and out, but we have some expectations. And I think that's the key. It's our future availability of funds. I'm trying to make sure I have enough money in the bank to cover what I need, right?
Mm-hmm.
So, and just a quick comparison, again, actual versus expected. And a lot of people work very hard to put cash flow forecasts together by pulling data and dropping it into Excel and doing all kind of mashups and VLOOKUPs and all of this stuff to put a cash flow forecast together. And yet, I'm going to show you how to do it here inside the product without having to do all of that.
So you're going to give us a crystal ball? Is that what you're saying?
I hope so. maybe not fully, but a little bit. And you know, the other thing I want to just quickly bring up is that from a reporting standpoint, we're going to use account schedules. Now, I'm not going to help you build account schedules here, but I did want to point this little thing out that I have highlighted here on the screen. And you probably didn't even realize it was there. Did you?
Okay, no, I saw it. I just didn't know how to use it.
Yeah.
So again, this is great because account schedules is a tool that we use already. So it's not even like we have to learn a new report writer or tool to get the reports we want. This will be great.
Yeah, no, it's really good. And then I just have to point this out, cost type and cost total work with, you know, our cost accounting piece, right? So these are ones we are kind of new over the last few years, and these are the ones we're all intimidated by, but we're going to get over that with our cash flows today. So
thank you.
All right, so how do we build a cash flow forecast? We're going to do it in 8 easy steps. I'm going to walk you through the chart of accounts, the setup, the main forecast record, the worksheet, kind of a review process, manual entries, register, and report. It's really easy. Let's get started with our 8 easy steps. The first one is our cash flow chart of accounts. I'm going to do a quick demo for you and kind of walk you through the chart of accounts and tell you a little bit about each account and how you can set it up. This is an alphanumeric chart of accounts. I believe this is what is there in your Cronus demo company. You do not have to have the alphanumeric that you see here. You could use your chart of accounts, maybe your liquid funds are in your 10,000s or 100,000 range, your payables maybe in your 20,000s. That's totally up to you. The system doesn't care how you number them. You could call it receivables without any numbers. I think numbering kind of helps you align it a little bit. I would have probably wanted to do 01 in receivables. And just so they line up, I don't like it when a 10 comes above a 1. That's, again, the geek in me. But you have a lot of options here. As we go into the account card, you'll see it looks very much like a chart of accounts. I'm stumped. I don't know why this is not. It's so long there at the beginning.
Okay, so let's go back to that. Let's go to the cash flow, the first step. And when you go to the slide after this one, make sure you click on your start arrow. I think you don't have it set to automatically start when you hit the slide.
And I thought it was, but
I don't think it is.
Not to be.
So I think you're fine with how much is in the front with what you had, but you hadn't started it right at that point.
Okay, I thought it was automatically started, and that's my fault. Yeah. Okay.
No, that's okay. Right. So let's go ahead and pause for a second and do that. So let's go to the cash flow chart of accounts, step 1 or whatever.
Well, let's get started with our 8 easy.
Okay.
Let's get started with our 8 easy steps. The first one is our cash flow chart of accounts. I'm going to do a quick demo here for you just to walk you through the chart of accounts. You'll see here on the list, I believe this is what you have in Cronus in NBC. It's alphanumeric. It does not have to be that. You could somehow tie this to your chart of account numbers where your liquid funds are the same kind of numbers as your bank accounts, and your payables is the same kind of account number range as your payable section. The alphanumeric, your choice, make it be what works for you. Let's look at receivables.
I get to pick whatever I want is basically what you're saying. I can
You really do. You really do. I have continued to use what the system has, just, you know, I guess you kind of get started with that. So you can see here receivables, and some of the things that are different, the account type. In our regular account, we have posting, not entry. Here we have entry because we didn't really post anything. But we do have headings and totals and beginning and ending totals. So you can see how you can grow the chart of accounts for cash flow as much as you need to. And so you have the same options as you do in your regular chart of accounts. Just remember, entry and posting kind of go together. And then we still have the totaling. You've got your number of blank lines and new page, very similar to your regular chart of accounts. Source type is where things get different, right? So I have receivables here, and this is a defined list of source types. And I'll help you make that connection and how that gets used. So let's look at payables. Notice the source type changed, right, to payables. And I'm not doing anything out of the general ledger right now. I'm not connecting receivables or payables to the general ledger. But on my liquid funds, I am using the general ledger. And there's, you can see the different types of entries that I have. So I'm using liquid funds here, and I'll show you some of the others as we go along. I am using the general ledger for liquid funds. Where else would I get? I guess I could get it from the bank account, but that's not one of my options. So I'm doing the account range. Or maybe I only want to pull in certain cash accounts, right? Maybe I don't pull in money market account if I have one. And here's my manual expenses and so on. Manual revenue, manual expenses. And here's a new one, sales orders and purchase orders.
That. Because how else can we get that value unless we throw what we have into Excel and add it?
That's exactly why people use Excel to do cash flows.
Yeah.
Because we've never had the ability to pull in things that hadn't already happened, right? And this is what cash flow allows us to do. We're looking into the future in our crystal ball.
Crystal ball.
Our crystal ball. Okay, so let's break this down a little bit more. Again, just showing you the overview. Now, the amounts you're seeing here are actually because I've run a cash flow forecast. You may or may not have those on your screen when you start. They should all be zero. But let's, again, I want to talk about the fact that you can make this as simple as you want, which is, I think, what you get when you first look at Cronus. They're very, very simple chart of accounts. You can expand upon this. I did have a client who did receivables, and they had set up both intercompany receivables customers and their trade customers. So they have all of this stuff in their customer ledger, because receivables is pulling from the customer ledger, not from a GL account.
So
Payables.
Kim, does that mean then you can like filter that receivables somehow to separate them out? How did you handle that?
Exactly. So what we did, you can't really filter the customer ledger, right? It's going to pull it all. But we set up another account in our cash flow chart of accounts to look to the general ledger, to that intercompany receivable account. So we had the total customer ledger, and then we had another account with just the intercompany, and we just subtracted one from the other when we did our reporting.
Oh, excellent.
So sometimes you have to get creative, right?
Yeah.
But it was easy to do. You just had kind of, how could I get one number separated from the other? So that, think about those kinds of things. I did, and as you work with this, I think you'll come up with neat, new, and different ways to use your chart of accounts.
Now, the way you combined them was later on in the account schedule, right?
Exactly,
Right.
in the account schedule. This was just another view into the account card, right? And I did want to point out maybe one thing that I missed in the demo was the fact that in your GL integration, you can pull just the balance out of your general ledger. You can actually have the system look up budget.
Wow.
Right? So what about setting up some of your expenses and you want to pull out of the budget. Maybe there are expenses that, they come up once a quarter or twice a year. You could literally set those up to pull out of the budget, and because they're not in the general ledger at that point, right? So I think every time I get in here, I think of new and additional ways to use the system. Now,
and again, we can have more than one budget. So we might have a budget that we've put in just for the purpose of our cash flow.
Absolutely. Absolutely. So the thing that I was leery with when I got done, I guess, through the cash flow accounts, was I just didn't quite understand what this source type was for. And the reason I had you set up the cash flow chart of accounts first before going to our cash flow setup is because we need those accounts when we're doing our cash flow setup. So I think a lot of times you think I'll go to setup first, right? Well, I did that, and then I realized that the main thing I needed to set up in my cash flow was my chart of accounts. So one thing that's really important here, and I just really didn't have a feel for this, was this automatic update frequency. And this literally will update your cash flow. And there's a chart that we'll show you later that can be in your Roll Center, and it'll update for you. And I thought I had forgotten I set up one, and I went to look, and it was current, and I hadn't done anything. The system updated it for me. So that's kind of exciting. It actually sets up a job queue for you. There are other things in the cash flow setup that I've not used yet. Of course, your numbering, you can have the system, sequentially number cash flows. And, but the basic here is attaching the chart of account numbers that you define to the system's receivable accounts in cash flows, the payables, et cetera. And there's only these 4. It's not like you have to do it twice. It's just these 4 or 8. Sorry, I can't count. And that's all there is really in the cash flow setup. There are some things about AI that I haven't gotten into yet. So there's a few more things in cash flow, but you don't have to worry about them. We're getting you started with the basics, right?
Good. That's a good place to start.
Exactly. Build on your knowledge.
Exactly.
So let's talk about the forecast card. And really, this is where we kind of bring some things together. So I just called it Summit Cash Flow. I could have a second description. I can tell the system some different things that I want to do about discounts and payment tolerances, cash flow payment terms. I'm going to talk about that in a minute. Is this a chart I want to see in the Roll Center? Cynthia, does that make you think that why would I have to flag this? Here's my cash forecast. Maybe
I can have more than one cash flow forecast. Right? Wow, that's great, because I guess it depends on who needs the information and what they need in their forecast or what we want to share, right?
Exactly.
Wow,
and maybe
great.
I'm looking at, a different budget range. Maybe I'm not including manual payments or things in one forecast, but I am in another.
Salary information.
I'm playing with a new one over here, and I don't want anybody to see how messed up I have it.
Right. Wow.
So,
that's great.
yeah.
Oh, that's good. That's excellent.
It really is exciting. So a lot of different pieces here. If I have something that's overdue, I can move it around, and here's the budget I connect to. So maybe I'm actually working on one that's for using a different budget, right? So I can only apply one budget to one cash flow, which is a great reason to have multiple cash flow or forecast records.
Oh, that's
right?
great. Yeah.
So I mentioned that I'll talk about cash flow payment terms, and I think this is something we don't use enough. We don't use cash flows enough either, but you've probably seen this cash flow payment terms on your customer and vendor records, right? And maybe thought, well, what the heck? Because it's 14 days, that's their payment terms. Realistically, though, if you have a customer and you've given them 14 days, do they pay you in 14 days? Maybe
Yep.
it's more like 17 or 20, right? And the same thing with our vendors. I mean, we don't necessarily pay in 30 days, do we?
Well, and
maybe.
the other thing is too, if you're not using ACH, you might find that there's 5 days before the checks that you've mailed are being cashed. So there's a 5-day difference in cash flow. If you're using ACH, it's immediate, right? But
Right.
this would allow you to account for that.
Absolutely. So it's customers and vendors, and I call it the real terms, right?
Right.
But it does help you really get specific when you feel like you're going to have money in the bank, right? Again, I
Right.
keep thinking I want to make sure I have enough money to cover what I'm trying to pay.
Accuracy.
So, accuracy. I like that term. So that's your forecast payment terms, the forecast record. What do you think? Are you less worried at this point? Does it seem overwhelming?
Yeah, I think because you're taking me through it step by step in the order, if I go to docs.microsoft, I might get information about this, but it might not be in the right order. And from your experience of trying to get this set up, you've realized, well, I can't go to setup first because setup requires accounts, so I've got to go to the accounts first. So yeah, I'm feeling really good about this, Kim.
Feeling better. Good.
Yes.
So let's talk about the worksheet, because the cash flow worksheet is kind of where the magic happens. And we have, kind of like you have in payment journal, we have suggest lines, right? So we have the ability to run suggest lines, and we're going to select what to include, and we can rebuild this and do this as much as we want to. I'm just showing you kind of the suggest lines over here on the right, and we'll talk about each of these. But first, why don't we do a little demo? Sure, this gets started. So we're talking about the cash flow forecast card, and you really run the worksheet from here. So under process, cash flow, and then process, suggest lines. And you can see here, this is all checked off, but you can include what you want to. I had somebody the other day say, I just don't want all my purchase orders in there. And they just toggle it off, right? Maybe you don't have any manual expenses that you want to include right now. You just toggle it. We took off fixed asset disposals in my example here. So just put in what you need. You could potentially change the budget name here. Actually haven't tried changing the budget to what I have on my forecast record, but I would think it might work. I'd have to check that one. And I didn't have any taxes set up. So there's just a lot of things that you can do here. That was a little fun with the pixelating. And notice the cash flow account comes in, your source type, so you know where it came from. You actually have the document numbers if you want to go look at them.
Wow.
Everything gets pulled in. And I did it once without having to do a whole bunch of Excel spreadsheets, right? Even job information will come in. This is using job planning lines. So I see this and I get excited every time. It's like all of this stuff just pulled in for me with just toggling those buttons on. Now here's something even crazier. I could change the numbers.
Oh, wow. Oh, because
Right.
they're just entries. They're a representation.
I don't think they're going to pay all that. I think they're probably going to ask for a discount, and I'm just making some changes, right?
This one's in dispute.
Exactly.
Right?
Exactly.
Wow.
They have to be careful with your signs.
Oh, yeah. Good point. And then I noticed too,
a positive.
I can filter this just like I can do in any other list page. So I could narrow it down to one group and review a group at a time, right?
Absolutely. Absolutely.
Wow.
So
this is really nice. I like this.
You can sort it by date, right? And look at what you think is going to happen day by day. And again, how it populated that cash flow date is it's using payment terms unless you tell it to use your cash flow payment terms. Okay. So,
Oh,
and that's the cash flow date that you're getting. Okay.
okay.
That's when it's supposed to hit the bank, if you will.
So if it's not as realistic as you would have expected, maybe you forgot to say to use the cash flow payment terms, or you forgot to
Right.
put those on all of the records. So now I'm thinking that I probably need to add something to my vendor and customer onboarding to make sure that not just the payment terms go in there, but the cash flow payment terms go in there.
Exactly.
Okay,
Exactly.
great.
Um, again, I was still leery about connecting the source type, right? Why do I need this source type in my chart of accounts? And it was also in the setup, and I just wasn't comfortable. And then it finally clicked, right? The source type in my on my account card matches up to the little toggle that I have when I do suggest lines. It just didn't hit me till here, right? I had done it a few times, and it's like, that's the connection. That, and so I just wanted to pass that along because that was one of the things I just was unclear about.
Mm-hmm.
So I think you asked me this the other day, and it was like, can you just pull in one type of funds, right?
Right.
So I did. I just ran the suggest lines for liquid funds, and you can see that's all
Yeah,
that's in
and
my
I think
worksheet.
part of it for me was if I'm going to start doing this, I like to do a little bit first and see if I've got it right. And when we first talked about this and I saw these entries, I was so excited. And we said, oh yeah, we can filter whatever. But I kept thinking, oh my gosh, that's so much. How can we
That's a
make it
good point.
easier?
Yeah. And I do think when you first get started, just for your own sense of security, if you will, doing
Right.
it in pieces, I'm like you, step by step, right?
Mm-hmm.
And so I did exactly that. I ran the worksheet for just liquid funds. Then I went and I added receivables in. Um, again, this is where I started thinking, well, where are these dates coming from and why? But you can see now I have liquid funds and receivables. And then I went again and I added in my sales orders. So now you can see here sales orders at the bottom. And again, those are looking at some dates as well, right?
Yeah.
When this is going to ship and what are the due date on them, that kind of thing. And so you can just do one at a time. Pull in purchase orders, don't pull them in, pull in manual expenses, your budget, your jobs. I was excited when I found out that you could pull information from job planning lines if you've got your dates in there and you're maintaining them and you've got pricing, especially for like milestone billing at a client that really makes a lot of sense for. So do it a step at a time. I know we're talking about our 8 steps, but even here for the worksheet and running that suggest lines, take your time with it, play with it, and get it where you like it, right?
Mm-hmm.
So that's really running the forecast. To me, the next step, and I kind of already alluded to this, but the next step really is review, right? And we've kind of been talking about that all along. You pull in your liquid funds and you take a look at them. You pull in your receivables and you take a look at it. Pull in your payables. Just get this till you're satisfied with what is in the worksheet. And I should point out that every time you do suggest lines, basically the system clears the journal and re-adds. So
For that type of line though, right? So like
yes,
if I have liquid funds in there and I have receivables and I have sales orders, but I choose to only rerun liquid funds, that's the one that's going to get replaced, right?
I believe the whole thing gets replaced. The
Wow.
whole
Okay.
thing gets replaced. And so here's a note, right? Those edits that you did,
Got to remember what they are.
they get wiped out. So
Yeah.
yeah. So if you find, like I did, I got all the way through and I got past my review stage, and I'll show you in the next one. But just remember, if you do make manual changes to an area, when you resuggest lines, it's a delete and rebuild, not an append or an adjust. So
or replace, yeah.
not,
So
yeah,
Kim,
not
with
that
that in
section.
mind, do you think from your having worked through this and figured out this approach and worked with other customers with it, do you find though that once you're comfortable with what it's bringing in, that most of the time you can toggle on for everything, run it, kind of do your double checks, and
And then you kind of leave it alone,
right,
honestly.
you're not going to
Yeah.
have to constantly be rerunning it. Do you think that's going to be the case?
That's what I'm seeing.
Okay.
You get it right. And what might happen is you might add some manual entries, but the next time it runs, it'll pick up your manual entries if you've got that toggled on, right?
Right.
So that might be a change. That's probably the thing I'm seeing the most, because bringing in your receivables, payables, sales orders, purchase orders, it just does,
So
right?
all this work we're talking about here, because I mean, this is a little bit of work. It's
Mhm.
really setup oriented and testing oriented. And then once we get everything the way we want and we understand what our process would be, like I want to review the sales orders because I know I'm going to take some of them out, or I want to review the purchase orders because I'm going to delete a few of them. Once we get that process established, we're thinking that that's not going to be that complex, correct?
Right. I do think that editing sales orders out, editing purchase orders out, are kind of one-off type things. Maybe you're doing a special cash flow. You've got some specific things coming up and you want to tweak it, but then when it automatically runs the next time, it's not going to have your tweaks, if you will.
Yeah, I was just thinking
Right?
about that. That
Yeah.
automation for the weekly run, it's going to now bring that sales order back in again if it's still there, right?
Right, which is maybe a way that you would leave that cash flow alone and have another one if you have something special.
That's a good point.
The CFO wants, a forecast and he wants to add or subtract these things. So,
And not have it be the one that's going to the chart
yeah,
and automatically update it. I guess the
yeah.
other thought I had, what I was thinking about is I've had customers who don't use quotes. So they will put sales orders in, um, to send off as a
Uh,
confirmation and wait for the customer to get back. So if you're going to start using this and you realize that you need to exclude a lot of sales orders because you're really using them like quotes, that would be a time maybe to start using sales quotes. So you can see
mm-hmm.
how raising your level of usage in the system sometimes exposes other opportunities for improvement.
Very true. Very true. That's a great analogy between. I never even thought about having. I have customers also that do you know uh, quotes in their sales orders, and yeah, that could very much distort your cash flow.
Right.
Um,
So now it's time to start using quotes.
yeah, there you go. So I got down here. I did my worksheet, reviewed it, and then I realized what we talked about manual entries, but I hadn't done mine. And I'll show you how I found them here in just a second, that I hadn't done them. So let's talk about those manual entries a little bit. So we can do revenue, we can do expenses, we bring them in through suggest lines, we can set them up to reoccur with an expiration date. And it's basically for things the computer doesn't have any idea about, right? Things that we know. And here's an example. I set up, we pay an annual legal retainer. We do it once a year in June, right? And we've got a contract that's going to go through 2022. That could be
I got one.
prepaid, what?
Kim gets a really big bonus for doing such a wonderful session.
Yay! Yeah, I mean, one-offs, a prepaid insurance, right? My insurance comes due in August, right? And then we're going to write it off over the year, but I'm talking cash. I want to know when I need that cash in the bank. So I'm talking expenses, but there could be revenue things too. We know that we've got a big milestone billing and we didn't set it up in jobs, but we did it based on timing for whatever
we have
reason.
a quote out there.
Oh, there you go.
Paid into an order, right?
Yeah, all kinds of reasons.
Yeah.
So I think this really empowered the cash flow forecast to be more than just what the system even knows, right? We did great. We got away from the general ledger by pulling in customer and vendor and sales and purchases, and now we can even do manual entries, things that your CFO accounting knows that needs to go in. So now we look at our worksheet process and we've kind of remember I said it deletes and rebuilds. We reviewed, we added manual entries, we back to suggest and review, kind of seeing a trend here, can keep going. So, but we've just done the worksheet, and the worksheet is not what drives the reporting, okay? We need to register our entries. And registering entries is really what updates the forecast record. So if you look at your forecast record before you register and you've just started this new one, it's probably going to look all zeros, right? Even though I have my worksheet populated, this is going to be zero.
This is kind of like forgetting to post your closing journal.
Yeah.
You got to remember to register the lines.
Absolutely. So let's take a look at what it takes to register those worksheet entries. We have a little demo for everyone. And we've built our worksheet. We've talked about kind of all the changes we can put into the worksheet and running suggest lines. And now we need to get this registered. That's our next step, step 7. So process, we can do show, which I've never really been a fan of this little feature for show, but it takes you out and really, you think it's going to show you, I think, the register process, and really what it's doing is showing you the transaction that line came from.
The source of that line. Okay.
Exactly. But it's up under process, which is just really kind of odd. So you want to do process, register, and of course you get the option like anything else when we go to post, right? You really want to do this. You say yes, and it registers them, clears the worksheet, right? Just like a journal. And now if you look at the cash flow, you actually, you know something happened. You see the numbers change. So Cynthia, when you need to redo the worksheet now for this cash flow, well, let's talk about the cash flow entries. And you can just see them. They're just like any other ledger entry, if you will, right? Cash flow ledger entries is what they're called. And all those things out of the worksheet came to here.
So this is just another subledger.
It is a subledger.
Business Central, but it's not based, it's based on some historical and some crystal ball.
Some crystal ball. I like that.
Yeah.
If you need to redo the suggest lines, you forgot a manual entry.
So I've made it this far. I've registered it, right?
And let's look at the statistics.
Okay.
And I did that again with this slide. So my statistics now have numbers in them, right? And guess what I forgot? I forgot that. I bet you know.
Entries.
I forgot my manual entries. So I'm going to do suggest lines again, right? And remember I said when you suggest lines in your worksheet, it clears the worksheet and adds. Well, the same thing happens when you register. It's going to take out all the cash flow entries and redo them. So this is literally like dumping the bucket, right, and refilling it every time, which is very different than what we do really anywhere else in BC, right? So
So what you're saying is when I haven't registered them yet and I'm working in here suggesting lines, I'm building my worksheet, I find I need to do something else, so I run it again, it dumps out the worksheet lines and it puts new worksheet lines in. If I
Correct.
get to the point that it's been registered, and so now my worksheet is cleared because it moved from the worksheet to registered, not posted, registered lines. And I realize that's still not right. So what you're saying is now I can go back to the worksheet. I kind of have to refill the bucket from the beginning,
Mm-hmm.
and then I'll be able to replace the
Cash
registered.
flow ledger entries. Mm-hmm.
Got it.
Yeah.
Okay.
So again, our process, repeat any or all these steps however many times you need to. And after I did that, right, I got my cash flow expense in
Manual.
there, right?
Yeah.
Finally got it in there. And this is really, I guess, your cash flow overall, right? We're not filtering this by date or anything, but just a glimpse into all of it. And they're drillable. And this is where you can really say, wow, that's too low. This is too high. In my example of my client who had receivables were way too high because it had the intercompany in there. And they're like, we want that to be less, right?
So this is where we still need the finance professional, right? Even automating this, we still
Yeah,
need your brain.
exactly. And again, though, I think it's like you said, you set this up, you get everything working, and then it's maybe adding some manual entries or setting up another cash flow for a specific look. And
So are there
not
other ways that I can see this data besides just here?
absolutely. Let's talk about some reports. Look, we're on
Yay.
step 8. I
Yeah,
hope at this point you're feeling, wow, I can do this, right?
yeah, because I want to make sure we get through everything
Absolutely.
before we run out of time. We
Or,
could talk about this forever.
yes, we could. So let's talk about reporting. There's a built-in cash flow date list, and I'll show you that. There's a cash flow by period that's, I call it a report, but you have a better term for it. We'll talk there. And then we'll talk about account schedules. So the cash flow date list is just a layout of our main source types, right? And it kind of runs off a little bit, which I wish it didn't. But it's really breaking it down, week by week. Remember I said it's a week. I have this refreshing weekly. I don't know if I changed that today, if this would do day or not, but I'm getting just a snippet of what's happening over the few weeks that it reports. So it's just another way to see our statistics. But if we take that into this one, the cash flow by period, now I'm getting a lot more breakout, right? Of course, I'm looking at it more date range, if you will. I forgot what you called this.
I call them interactive reports
There you go.
because what I'm finding is based on security and permissions, we can give individuals limited access to what they need in Business Central. And when I have something like this, that previous report was printed. So I look at that number and I see that minus 50,000 in manual entries, and I don't have any way to investigate it from that piece of paper. But if I come into this type of report, I have the ability of going to that entry for that cash flow manual down there, that minus 50,000. And because it's green, I know that that's a link to the underlying data. So I really firmly believe that unless you have to print out a report for somebody, and by the way, we have a way to do that, something like this is more powerful than anything printed with ink on a piece of paper.
Absolutely. Absolutely. I have always felt like the system is stronger on the screen than on the printed report.
Right.
A lot of times, we want to see 2 or 3 columns and you're getting 20. I'm exaggerating, but I just want to drill into a specific thing, right? Everything else I'm
Right.
okay with. And like you said, you
But you
can't
know
do
what?
that.
Sometimes we do just need paper, don't we?
We do.
So
And
can we get
and
a
we
report
do.
like that?
Because we do have to, managers and higher ups are not the ones who like to sit in front of a screen to
Right. Nor do we
analyze
want to
that.
spend a license on them.
That's true. So we really need to print, and that's where we use our account schedule. And this cash flow forecast report is using an account schedule. You can see it's an account schedule overview that I'm showing. And of course, you can make different rows, and you can see the trends. And I just love this because it's coming right out of cash flow. Remember, way back in the first, we talked about the definition. You can say a cash flow entries or totals, and that's what we're reporting here.
Well, and the other thing that's really cool about account schedules, if you actually go select the menu item account schedules with an S, it gives you the opportunity to do an overview with drillability and still print it.
Still be able to
So
print.
that
Yes,
account schedules, everybody laughs about the way I say that, is really your most powerful way to access all the benefits of the account schedule you've designed.
that's true.
And in
That's
this case, for
absolutely.
cash flow.
And verify your data, right? It's a great
Yeah,
verification.
interactive report.
I'm gonna have to remember that.
Interactive report. It's
And
the
then
right way.
the writer way. I love it. And the last but not least is the fact that way back there on the cash flow chart account, you might have heard me talk about that one little toggle was to show the chart in the profile. And this is what you would see in your role center. If you have the right access type thing, and it does get updated, it will tell you when it's been updated. And so you can literally come in every day and kind of watch that cash flow and what's happening to it.
That's awesome.
So yeah, it's great. It's great.
So Kim, I think we kind of need to wrap things up here so that we can take some Q&A.
Okay. Well, let's do that. How about you wrap it up for us?
All right. So we have shared a lot with you about cash flow forecast. And the idea is that when you finish watching this session, you've been empowered with enough information to go back and start using it. And that cash flow forecast is really one of those areas where you're starting to optimize the system. You're not using it just for your sales orders, your purchase orders, invoices, your financial statements. You're really taking it to the next level. Well, maybe this is something you didn't know anything about, which is why you're attending this session. How much more is there in Business Central that you don't know? How many more features and functions are available to you to optimize and make your life easier, your job easier? If you're an accountant responsible for month end, what can we use in the system to shorten the month end period so now you can spend time analyzing the data that you've been entering and confirming? Well, we have at Nuvia Strategies a self-assessment scorecard that you can walk through and you can get an idea of where you are in the utilization of all the features and functions in Business Central. We have a couple scorecards out there with more to come, and it's really cool because you get an idea of where you are related to others that have optimized their use in Business Central. Are you in your infancy stage, or are you one of those gurus who's really maximizing the potential of and the power of Business Central? We have classes, and the other thing I'll suggest is on April 29th, we are having an Ask the New View experts. So maybe you go through that scorecard and you go, oh, I didn't even know about that, or I'm not scoring very well, and you just want to ask the people behind this research. Join that session and ask us, or just reach out through our website. We are absolutely here for you to help you at any time.
Oh, very well said. So I challenge everybody to get started. Step one, just work these 8 little steps, keep building on it, and you'll have a cash flow. I guess it's time for Q&A.
Right. So, hey, everybody, we're here for you. Time to answer those questions, and I hope you fire away.